Tjena Pixter, det är fint med mig bara. Det är fint, hoppas allting bra med dig med. God kväll Oskar, god kväll. Jag har en fin, intressant kväll framför oss just nu. Med lite räntebesked, lite Powell. Kika lite tekniskt också. Så vi försöker hinna med. God kväll. Då ska vi se här. Ja. Tror vi 25 eller 50 ikväll. Det här är faktiskt väldigt intressant. För jag läste lite så här. 61% chance of 50, 49% of 25 basis points. Det är intressant att folk börjar skriva det nu. Något annat som jag tyckte var lite intressant innan, det var just den här om FOMC idag. Och det är final FOMC estimates from Bloomberg. Every single bank other than JP Morgan is predicting a 25 basis point rate cut today. Så JP Morgan, om vi kollar här, vi ser estimaten här och så har vi företagen här. Och så ser vi här att alla de större bankerna, så ser vi 5,25 alla som tror det. Och sen alltså den enda bland de större bankerna säger 5,25. I princip alla tror 5,25. JP Morgan är den enda större aktören. Det är vissa andra som tror att det kan bli 0,5. Men JP Morgan, en av de största bankerna i USA, de är de enda som tror att det kan bli 0,5 idag. Det är vad de tror. Sen så vet jag inte varför de går mot alla andra, vad de tror på vad de har sett. Men i alla fall 99 av 100 tror ju på en sänkning på 0,25% idag. Det är det som prisas in av marknaderna också. 0,50, det är på bordet. Det är inte helt omöjligt. Men det verkar vara väldigt stor konsensus i alla fall på 0,25 sänkning. Så det är vad vi förväntar oss. Skulle det däremot bli en sänkning, en dubbelsänkning på 0,5, då blir det väldigt intressant. För då är det en väldigt stor chock för marknaderna. För marknaden har prisat in 0,25 och i princip aldrig har den haft fel. Så det ska bli spännande om vi får bevittna historia idag att det blir mer. Jag tror inte att den kommer sänkas mer, men vi får se vad som händer. Vad är klockan just nu? Det är 19.53, så vi har ungefär 7 minuter tills vi drar igång helt enkelt. Kollar vi marknaden just nu, runt nollan. Nasdaq har ju gått en hel del upp och ner hela dagen. Vi ser att vi var väldigt choppy i början idag. Sen alltså gick ner vid öppning, sen gick vi upp, sen gjorde vi stort ras och nu har vi återhämtat oss allt igen. Så väldigt choppy marknad idag. Väldigt choppy inför den här ränterapporten helt enkelt. Och det känns väldigt 50-50 där ute. Min magkänsla, det behöver inte vara rätt, men det känns lite som att det kan vara buy the hype, sell the news. Alltså att marknaden har köpt upp mycket på sistone och prisat in den här räntesänkningen, och kanske när det kommer ut att vi säljer av lite. Men många fokuserar ju på räntebeskedet idag, att vi ska sänka med 0,25 eller 0,5. Och det är faktiskt inte det som är mest intressant idag egentligen, utan det som blir mest intressant idag, det kommer bli Powells ton på mötet som vi kommer livestreama vid 20.30. Så räntebesked 20.00, Powell kör live vid 20.30, och då kommer man prata om räntesänkningen, inflationen, men speciellt det marknaden och alla kollar mest på, det är vad Powell pratar om framtiden. De framtida räntesänkningarna, kommer de sänka vid nästa möte också, eller kommer de kanske vara lite mer restriktiva och säga att vi måste se hur inflationen kommer in de kommande rapporterna, eller säger han nej, vi kommer nog sänka nästa möte. Det är mycket sånt som marknaden kommer kolla på idag på hans presskonferensen vid 20.30. Så det är faktiskt det mest intressanta idag, och det är som sagt Powells ton vid mötet. För just nu vi prisar in 0,25% sänkning. Marknaden vet ju som sagt inte alls vad man ska göra. Där drar vi bara en väldigt choppy idag. Mycket sidled här. Så vi får helt enkelt se vad som sker. Vi inväntar ju rapporten här nu om 5 minuter ungefär. Så nyhetsfronten annars ganska lugnt den här veckan hittills. inte hänt jättemycket på börsfronten. En av de sjukaste nyheterna som jag har hört på riktigt länge dock, det är ju attacken i Libanon mot Hezbollah som då ryktas vara Mossad, Israels underrättelsetjänst. Det var ju då att Hezbollah vill inte ha telefoner för de vill inte bli hackade eller trackade, så de använder pagers istället, sånt som man hade förr och på mycket sjukhus och sånt. Och på något sätt så blev de här pagerna hackade, eller att de har redan byggts in med små sprängämnen från början. Men på en och samma gång så sprängdes 3000 pagers, som vi kan säga här, 12 personer, minst 12 personer dog och nästan 3000 skadade på att pagers exploderade i fickorna på med Hezbollah och Libanon militära allierade där. Så väldigt sjuk nyhet. Om det är så att de är inbyggda med sprängämnen från början, då måste det här vara bland den sjukaste underrättelsearbetet som jag någonsin har hört faktiskt. Att de har byggt 3000 sådana här och skickat ut till sina motståndare och spränger i deras fickor. Det är bland det galnaste jag har hört faktiskt. Väldigt galet. Vad är vi klockan? 3 minuter. 3 minuter. Det blir spännande här nu. Ser vi hur mycket som vi vill sänka. Är det någon som tror att det kan bli 0,5? Det hade varit sjukt. JP Morgan tror på 0,5. Vi pratade om det precis här nu i början. Att JP Morgan är de enda som tror att det kan bli 0,5. Vi ser här att alla de här större andra instituten, de estimerar 0,25. JP Morgan, de tror på 0,5. De sticker ut hakan och säger att nej, vi tror att Fed dubbelsänker. Så antingen vill de bara sticka ut lite, kanske marknadsföring, vem vet. Alla pratar om att det är vad JP Morgan gör. Eller så vet de något som inte alla andra vet. Det återstår att se och vi kommer få svaret om cirka 2,5 minut. Det ska bli spännande. Oj. Vi ska se här. Marknaderna börjar röra sig lite. Börjar bli lite volatilt. Nej, faktiskt rätt lugnt fortfarande. Nasdaq går i sidled. Vi får se vad som händer när rapporten väl dyker in här. Men fortsatt ganska passivt. Vi handlas exakt runt nollan. Så marknaderna också, de vet inte riktigt hur de ska ställa sig in på det här än så länge. Hur de ska reagera kring allt det här. Men snart så kommer vi få ett beslut helt enkelt. Forex Factory var vi kvar 1 minut och 40 sekunder. Tills vi får in räntebeskedet från Federal Reserve. Väldigt intressant. Magnus, god kväll på dig, god kväll. Seb, tjena. Hoppas allt är fint. Ja, 1 minut kvar. Av någon annan lite intressant nyhet. Will the election impact crypto markets? Ja, Trump håller ju på att ralja kryptopubliken. Han pratar ju väldigt gott om krypto. Så det är ett litet play han kör. Att kanske fånga lite fler röstare bland kryptoinvesterare och folket där. Sen så om man verkligen bryr sig eller inte, eller om det bara blir att folk ska rösta på han. Det är en annan sak. Förmodligen så bryr han sig inte alls. Han vill bara att folk ska rösta på han. Men nu närmar vi oss 40 sekunder. Det känns som att vi har en nedräkning till nyår nästan. Kommer det bli skjuta nyårsraketer och allting här nu direkt. Men ja, 0,25 är det vi väntar oss. Skulle det sänkas med 0,5%? Det hade ju varit galet. Det hade det varit. Jag ska inte ljuga. Det hade varit sjukt. Men om 15 sekunder har vi svaret. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0. Till min telefonen plingat. Mindfulness. Take a moment and reflect on how your day has gone today. Direkt när räntebeskedet kom ut. Apple Watchen. Tycker jag ska meditera. Happy New Year. Ja, pending, kom igen nu. Ut med det. Vad hände? Okej, så de sänkte med 0,25, det som var helt inprisat av marknaderna. Så vi fick en sänkning på 0,25%. Alla hade rätt förutom JP Morgan som sa 0,5%. Marknaderna går extremt positivt på den nyheten som vi alla visste skulle komma. Upp 1% direkt i Nasdaq. Det här är ett jävla grönt candle. Sen får vi se om det här håller i sig. Det har hänt många gånger att vi sprutar rakt uppåt eller trycker rakt uppåt och sedan så går rakt ner igen. Men väldigt, väldigt stark. Vi poppar 1% direkt i Nasdaq. Mer nu senaste minuten. Så det är positiva för de långa portföljerna i alla fall. 1,3. Väldigt, väldigt stark reaktionen då. Ändå starkt att vi reagerar 1,3% på någonting som alla har förväntat sig. Så väldigt, väldigt spännande. Vi får se om det håller i sig. Någonting man ska vara medveten om, det är när vi får in de här rapporterna. Det kan gå upp 1% för att sedan stänga minus 1%. Och vi kan falla minus 1% för att sedan stänga plus 1%. Så det ska bli intressant. Vi kommer hålla full fokus på Powells tal om en halvtimme ungefär. Det är verkligen det som kommer att sätta tonen. Men jag tänker att vi hoppar direkt in till era frågor. Vi startar Q&A nu. Så vi kör Q&A nu i en halvtimme. Från 20.00 till 20.30. Så har ni aktier och kryptoindex som ni vill att vi ska kolla på tillsammans, skriv dem i chatten. Har ni frågor om aktier, trading, livsråd, vad som helst, så är jag här nu i en halvtimme innan Powell drar igång helt enkelt. Så låt oss börja kolla på lite aktier. Ska vi se här om det är någon som... Så, Saab hade jag fått in här från flera. Vi kikar på Saab. Så jag tycker det ser ganska negativt ut i Saab faktiskt. Det gör jag. Jag tycker inte det ser allt för positivt ut. Och vi har ett stöd här som är väldigt bra. Den här nivån här vid 216-217. Oh shit. Är jag så ute och cyklar? Det blev en sänkning på 0,5%. Herregud. Jag räknade från forecast 5,25 till 5. Okej, det här ändrar allt. Herregud. Jag läste från 5,25 till 5%. Okej. Wow. Shit. Herregud. Här ändrar ju allt. Okej, nu får vi ta en breather här, kände jag. Herregud, okej. JP Morgan. Herregud. JP Morgan, de enda av alla banker, alla storbanker, de sa 0,5 sänkning. Alla andra sa 0,25. Marknaden prisar aldrig in fel i princip. Det har inte hänt på 60 plus år. Men idag hände det. Jag var så inne i den egna bubblan att det är klart det blir 0,25%. Det är det alla förväntar sig. Det kommer bli 0,25%. Alla prisar in det. 99,9% har prisat in det av alla analytiker och banker. Men det blev 0,5. Wow. Det där är faktiskt väldigt intressant. Det förklarar rörelsen absolut i marknaderna. De sänker alltså med 0,5%. Det där är ju väldigt, väldigt chockerande. Jag vill faktiskt säga, Bloomberg brukar vara väldigt bra live när sådana här saker händer. Jag vill faktiskt höra vad de säger här. Wow. Det där var faktiskt väldigt, väldigt chockerande. Shit.
But that 10 officials Pence playing out publicly as well. The first dissent from a sitting governor on back by about 0.7%. So that's a weaker dollar, a stronger Japanese yen. Lisa, 141 on that currency pair. Yeah. Of the month. My line of the month. This is the countdown in the equity market to be moved.
It's 50, and the promise of another 50 basis points in cuts by the end of the year, and another 100 basis points in 2025, which would put the nation's benchmark rate at 3.4%. It's projected to fall another 50 basis points in 2026, which would put the rate at 2.9%, which is now the Fed's median forecast for the neutral rate. That is up 1/10 from June. The consensus is GDP will rise 2% this year, down 1/10 from the June forecast. Growth will be the same in 25 and 26. Unemployment will hit 4.4% this year. That's an increase from the June figure. It will fall to 4.3% in 2026. PCE inflation of 2.3% this year falls to 2.1% next year and hits the 2% target in 2026. Though inflation remains, quote, and the labor market, the state data
0.7% on the S&P. It's the first move. Might not stick, but this is the move so far. Up by 0.8% on the S&P 500. The overwhelming outperformance on the Russell. The small caps now up by 1.7%. In the bond market, just bear in mind, we've come a long way, and we've priced in a lot to this yield curve. The 2-year just climbing just a little bit to unchanged at 360 at the moment at the front end of the yield curve. And in the FX market, dollar yen dropping back by about 0.7%. So that's a weaker dollar, a stronger Japanese yen. Lisa, 141 on that currency pair.
Yeah, now over to the Bank of Japan. And if they hike, how much does that divergence continue? I also want to point out gold. You're seeing a bid into gold right now. We start to look for some of the inflation proxies. So will this sort of feed into that idea? I thought it was interesting. The long end of the yield curve, just on the margins, not significantly, yields just slightly up on this idea that they're going to go bigger and potentially even more down the line.
So the median dot can mask some disagreement beneath the surface. So let's talk about the range and not just the median at the FOMC. The median dot for 2025 in the projection materials that were just published is 3.4%. The range for 2025 is anywhere from 2.9 to 4.1. 2.9 to 4.1. That's quite a range on this FOMC. And I think for the first time in a long time, we have some dissent playing out publicly as well. The first dissent from a sitting governor on the FOMC since 2005. This was not a unanimous decision.
And it really highlights why this actually became such a knife's edge kind of decision. Just to add to that, 10 officials penciled in 100 basis points or more of cuts for this year. 9 officials penciled in 75 basis points or less for this year. It actually matters quite a bit for market expectations, especially given some of the policy uncertainty next year.
So, TK, we get 50. We get 50, and now we're waiting for the next act. It's a news conference in 26 minutes' time.
I think it's a surprise. Within the zeitgeist, this is to the edge of surprise. I think Powell maybe alluded to this with his enthusiasms at Jackson Hole. You touched on something Jason Furman touched on this morning.
Okej. Väldigt galet. Vi fick sänkning på 0,5%. Shit. Okej, och de verkar vara väldigt oense i Fed. Det var det de pratade om här, att de var väldigt spridda ut över alla som röstade, och under nästa år så räknar man att räntan kan vara allt från 2,9 till ungefär 4,1 tyckte han sa, vilket är väldigt stor skillnad. Men wow, Fed sänkte alltså det dubbla, och vi ser ju att det reagerade positivt först, men det här är inte spontant. Jag är inte någon civilekonom och så, men att man dubbelsänker direkt, det skickar väl ändå signalerna lite i min bok, att man känner att vi ligger efter lite, och sänker vi inte dubbelt direkt så kan det drabba ekonomin väldigt mycket, och vi kan få en hard landing istället för en soft landing. Det pratas väldigt mycket med soft landing, att man sänker räntan lite hela tiden för att det ska vända inflationen. Man ska inte göra det för snabbt för att elda på inflation. Men här kör man en dubbel direkt, och jag ska vara ärlig, jag vet inte om det är så positivt egentligen. Vi får se vad alla tycker och tänker sen när alla har fått bearbeta det här. Men spontant, första reaktionen av marknaderna, alla jublar uppåt, räntan går uppåt, eller räntan går neråt, jättepositivt för aktier, ekonomin, allting blir billigare. Men det skickar ändå signalerna att Fed känner att vi måste ändå börja sänka, vi kanske ligger efter här. Det är ändå en del, Sverige har redan sänkt flera gånger, runt om i Europa har man sänkt flera gånger. Det känns ändå som man tycker att man ligger kanske lite efter med sänkningarna, och det tog ju väldigt många banker off guard. Det gjorde det verkligen. Så, nej, intressant att de valde det här. Jag vill nästan känna att, som jag sa, att det känns lite negativt. Så att vi reagerar väldigt positivt nu först, vi får se om det håller i sig. Men jag tycker det skickar signalerna lite att Fed känner att vi måste agera. Vi kanske skulle sänkt med 0,25 redan förra mötet och sänkt ytterligare 0,25 nu för att trappa ner. Men vi får se hur vi fortsätter helt enkelt. Så JP Morgan, man måste faktiskt prisa JP Morgan. Vi pratade om det i början. Det fanns, vi måste nästan säga videon här igen. Alltså alla stora banker här, bankernas namn och här estimaten, alla skrev 0,25% sänkning i princip. Vissa ensaker kom utanför, men den enda storbanken som körde på 0,5%, det var JP Morgan. Där har vi dem, JP Morgan, alla andra. Ja, man måste ändå ge dem det alltså. Här har vi någon som är riktigt hög. Nat Fed of Independent Business, ingen sänkning alls. Ja, han var helt ute och cykla. Men alla andra är 5,25. Ja, JP Morgan. Ja, vi får ge det till JP Morgan. Men ja, vi taggar till lite till Powells tal om 20 minuter. Vi ska försöka hinna med några analyser här nu också att kolla på. Så Powell om 20 minuter kommer bli väldigt, väldigt intressant idag faktiskt. Men Saab, vi kollar lite tekniskt på Saab. Vi har ett väldigt bra stöd här vid 216. Men jag tycker det ser ganska bearish ut för tillfället. Någonting i den här stilen trendar vi väl i just nu. Man kan till och med dra ner den kanske dit där. Stödet här vid 216 kommer bli väldigt, väldigt viktigt för Saab framöver. För bryter vi undan här, då hamnar vi också under alla moving average, vilket är väldigt negativt. Vi brukar generellt se ganska mycket nedgångar då. Jag vet inte hur det har gått tidigare när vi hamnat under alla. Nej, här klarar vi oss ganska bra. Det var bara lite nedgångar. Gången innan det, när hamnade vi innan, det var här, då fick vi ändå lite mer dippar. Så vi får se, men jag tror att den nivån här i Saab är väldigt viktig. Finns bra stöd här vid 2016, men faller den så kan vi nu börja falla allt hårdare neråt. Ska vi se, SBB, jag tror att många vill att vi kikar på. SBB fortsätter hålla den här trenden väldigt fint. Jag tycker det ser bra ut. Och med Feds dubbelsänkning idag, det gynnar absolut fastighetsbolagen. Man kan tänka allt om ekonomin, inflation och liknande, men lägre räntor på det här sättet kommer nog absolut gynna fastighetsbolagen. Så ska bli intressant att se hur SBB och de svenska fastighetsbolagen rör sig imorgon. För här borde ändå vara lite glädjebesked från dem att banker runt om i världen, räntan är på väg neråt, det kommer bli billigare att låna, mindre avgifter, det brukar oftast leda till högre bostadspriser och man kan då dra upp värdena lite igen. För många har ju skrivit ner värdena, många fastighetsbolag, då värdena har gått ner. Men det här är absolut positivt. Jag tycker SBB fortsatt fin trend. Jag tycker så som SBB vill fortsätta uppåt, och med den här räntesänkningen i ryggen så tror jag absolut det kommer hjälpa fastighetssektorn. Det tror jag absolut. Vi får se. Vi kan kolla igen. HTRO. Hexatronic. Jag bears Hexatronic. Vi pratade om det förra onsdagen. Jag är negativt inställd till Hexatronic. Den här nivån är den som jag pratat om. Är väldigt troligt att vi kommer ner till. Vi pratade en del om detta förra onsdagen i webbinaren, att det ser ganska toppigt ut i Hexatronic. Att vi ska ner här mot 47 känns väldigt, väldigt rimligt. Och det är väl det vi ser ut som vi håller på att få just nu. Vi faller lite hårdare, 10% idag. Jag tycker den här nivån här vid 47 är första starka stödnivå. Man kan hålla koll på för lite bättre stöd. Vi ser en ganska tydligt channel här som det rör sig i. Tar man bort alla indikatorer så ser man det väldigt tydligt att reagerar fint vid toppen, reagerar fint här vid botten, och nu är vi på väg ner hit igen. Så lite kortsiktigt bearish, lite negativ kortsiktigt, men kommer vi ner hit här till 47 nivån så är det absolut ett stöd som man kan hålla koll på. Herregud, jag är lite chockad fortfarande alltså. Hur reagerade guldet? Det vill jag ändå se. För lägre räntor. Vad tycker guldet om det? Hallå? Nej. Den tyckte ingenting alls. Nu ska vi se. Guldet gillade högre räntor. Eller lägre räntor. Guldet ser fortsatt fint ut. Pratade om det i söndag så att guld ser starkt ut. Och just nu, det ser ut som guld bara vill fortsätta på uppåt. Hade kanske tänkt mig att guld vill falla lite på lägre räntor, men guldet vill fortsätta squeeza på uppåt. Guld ser starkt ut. Bitcoin, jag reagerar Bitcoin, ja. Bitcoin. Reagerade vi när nyheten kom ut. Bitcoin sköt uppåt ganska mycket. Kommer ner lite nu, inte jättemycket rörelse där. Nasdaq faller tillbaka lite nu. Marknaderna verkar ändå lite oroliga för dubbelsänkningen. Det gör de. Fort Knox. Låt oss kika på Fort Knox. Gillade Fort Knox här nere. Botten på här. Bör komma upp här uppe nu. Här kommer finnas ganska mycket tufft motstånd. Kommer finnas en hel del motstånd här uppe nu i Fort Knox som ändå ska hålla lite utkik på. Att det kan bli tufft här uppe. Så jag skulle ändå förvänta mig att här uppe kan bli lite tuffare i Fort Knox. Nivån här. Mycket motstånd som kommer upp här. Vi har 200 dagars moving average som lägger sig lite som en våt filt här. Vi är uppe i toppen på den här trenden. Vi har ett gap som stängs. Så här uppe tycker jag absolut det kan bli lite tufft. Så jag studsat bra från botten, men jag skulle ändå säga att i den här zonen här nu så kan det bli lite tuffare. RVRC Revolution RVRC, det vet inte så vad det här är. Vad kan vi tycka om den här grafen? Den hade en ganska tydlig trend neråt innan. Börjar bryta sig uppåt här nu. Retesta, kommer upp lite. Den känns som den håller på att vilja bryta uppåt, men det känns ändå som den har det lite tufft. Det känns inte riktigt som att den orkar bryta på helt. Så nej, jag skulle nog vara ganska neutral här. Det är väl ingenting som jag gillar för mycket här, tycker jag. Jag skulle nog vara ganska neutral för tillfället. SSAB har haft det väldigt tufft, måste vi säga. Har haft det väldigt tufft. Fallit mycket på sistone. Den här nivån här vid 40, det är den som jag har mappat ut för lite starkare stödnivå. Det är en nivån där som jag tycker ser lite intressant ut. Vi ska säga det är lowen från 2022. Och vi har en fin Fibonacci-nivå som möter upp där också. Så nej, det ser väl ganska negativt ut fortfarande. Vi har fallit ganska länge. Det är väl ingenting som ser positivt ut än. Men det är väl den här zonen här nere där jag tycker att det börjar se lite intressant ut att köpa igen. Det är väl den zonen där som jag hade haft lite extra utkik på personligen i SSAB. Embracer. Jag tänker att vi tar några av de namnen. Jag försöker alltid ta i turordning, men jag kommer inte hinna så många idag, så jag tänker ta de som jag tror är mest uppskattade. Embracer. Väldigt starkt. Studsade, det fanns en väldigt fin köpläge här nere. Hade man koll så här fanns ett väldigt fint köpläge vid den här nivån här vid strax under runt 21. Vi stängde det här fina gapet här. Vi var exakt nere i botten på sin trend. Och studsar väldigt fint upp här nu. Upp ungefär 25% från det. Och blir intressant här nu i Embracer. Blir väldigt intressant. Uppe vid taket här på sin trend. Kan vi bryta över här så är det väldigt positivt. Vi får se om den orkar. Det ser faktiskt ut som att den vill börja trycka på allt med uppåt här nu. Så uppe i taket här. Håll koll på motstånd här uppe. Men stänger vi utanför här. Utanför den här trenden och vi börjar handlas. Vi börjar stabilisera oss lite utanför. Så kommer vi nog minst testa den här 28 nivån. Men det finns en bra chans att vi ska börja jobba oss resan uppåt här mot 31 nivån igen. Så jag tycker det börjar se allt bättre och bättre ut i Embracer. Nu bör vi bara se att den bryter utanför den här kanalen. Så ser det väldigt fint ut. Så vi får se om den lyckas bryta sig ovanför de här motstånden här nu. Kan bli tufft, men orkar den bryta sig över så hade det varit väldigt, väldigt positivt. Intrum. Respekterar sin trend väldigt, väldigt fint. Väldigt fint. Sist vi kollade på Intrum, då kollade vi på den här trendlinjen här. Att kan vi bryta den här trendlinjen så har vi en väldigt bra chans att gå upp och testa den här toppen igen här vid 51. Och vi är uppe där nu. Jag tycker det ser fortsatt ändå positivt ut. Just nu så håller vi på att bryta över de här tidigare topparna. Här vid 50 nivån. Så det ser ändå ut som Intrum vill trycka på uppåt tycker jag. Det gör den. Toppen här. Finns en del motstånd vid 53 nivån att hålla lite utkik på. Men vi ser det är en fin uptrend nu för tillfället. Och någonting som jag gillar väldigt mycket. Det är när vi kan komma ovanför alla medelvärden. Alla moving average här. När vi gör det så brukar det vara väldigt, väldigt stark trend. Och Intrum gör det just nu. Så jag tycker det ser ganska positivt ut i Intrum. Och så ut som den bara vill fortsätta jobba sig uppåt. Tidiga all time highs, vad är det Intrum? Det är uppe vid 360. Trendatoppen här var vi flera gånger. Så vi har gjort en väldigt, väldigt fin återhämtning från kraschen här vid 10 där alla trodde att Intrum skulle gå i konkurs. Till att vi nu återhämtar oss nästan 5x från de här nivåerna. Men trenden ser fin ut. Det ser ut som Intrum bara vill fortsätta tagga sig på uppåt. Är det positivt eller negativt nyhet för börsen? Så vi fick en dubbelsänkning idag, vilket var väldigt galet. Det var bara JP Morgan som hade yttrat sig av de storbankerna som trodde det i princip. Marknadspris i 0,25. Och det är svårt att säga om det här är positivt eller negativt. Vi får höra lite vad Powells syn är på hans tal. Spontant sett så känns det väl lite som att Fed känner att de ligger lite efter på kulan. Alla trodde att det skulle räcka med 0,25 men Fed kände att de behövde 0,5, en dubbelsänkning för att verkligen sätta igång den här kulan på riktigt. Vilket gör folk lite oroliga, kanske att det blir en hard landing. Alltså att man behöver lite mer. Man pratar väldigt mycket om en soft landing innan och det som menas med det är ju att man sänker räntorna fint, långsamt hela tiden för att inte påverka inflationen eller att inflationen ska gå upp för mycket. Men här ser det ut som att man kanske var lite orolig för en hard landing och att det då blev en dubbelsänkning. Oj, Bert-Ola Jonasson, 100 kronor. Tack så mycket. Tackar. Fint av dig. Men ja, så marknaden, vi reagerade för oss positivt, sen sålde vi av lite. Min spontana tanke, det är att det är lite negativt. Sen får vi se om börserna håller med. Och ja, vi får se hur det håller i sig. Jag tycker det känns väldigt stor chock att vi fick en dubbelsänkning. Det skickar lite signal att Fed kan vara lite efter på kulan. Så det blir intressant att se vad Powell säger. Powells tal om 5 minuter kommer ha väldigt, väldigt stor roll. Nibe, jag pratar om Nibe mycket de senaste månaderna. Och så länge vi är i den här kanalen här så kan jag inte vara något annat än negativ på lite längre sikt på Nibe. För att den har respekterat den så fint i över ett år nu. Väldigt fint både i botten och i toppen. Det finns fina köplägen om man vill trada här nere runt botten. Det finns bra säljlägen här uppe vid toppen. Nu börjar vi komma upp mot toppen här igen. Och vi får helt enkelt se hur den reagerar här nu. Om vi kollar på ett historiskt data så har den vänt här uppe varje gång. Och det finns ingen anledning för oss att förvänta oss något annat denna gången. Skulle vi däremot i NIBE lyckas bryta oss över den här kanalen här och alla moving average, alltså det jag pratade om precis, att kan vi komma ovanför alla de här medelvärdena, alltså även över den gula, ovanför den här kanalen, ja, men då kan jag börja känna att okej, då är det nu dags för NIBE att starta sin större återhämtning och vi kanske har en ny uptrend likt det här på G. För vi kan ändå göra argumentet att det håller på påbörjas en ny uptrend här nu. Vi har 2 touch på botten, vi har 2 touch i toppen här. Och det är möjligt att det kan vara en ny trend på väg. Men kan inte säga det förrän att vi har brutit den tidigare negativa trenden och kommit över alla de här medelvärdena. Ser vi det och att vi kan handlas uppe här vid 54, 55, komma över allting, då bör det absolut se väldigt positivt ut för NIBE, bör kunna återhämta sig upp mot, ja men vi snackar nivå upp här mot 67, även upp här mot 76 kan bli intressant. Men då behöver vi se någonting i den här stilen, att vi lyckas ta oss över, att vi kommer över hit, någonting i den här stilen. Kan vi se det ovanför alla moving average, ovanför den här trenden, ja men då tycker jag ändå ser positivt ut för en resa uppåt. Men innan det här nu så är det fortfarande negativt, så man vill hålla koll på ett utbrott uppåt i NIBE. Volvo. De har haft det lite tufft på sistone. Vi kan se ganska tydligt, som vi pratade med NIBE precis, att lite samma case nästan, inte fallit lika hårt, men vi ser samma tekniska formation. Det är att vi har en tydlig trend neråt. Vi handlas i princip under alla medelvärden förutom de väldigt kortsiktiga som är 9 dagar, alltså 20. Så här. Så, men lite samma som NIBE skulle jag faktiskt säga. Ser negativt ut, vi trendar neråt, vi har lägre toppar, lägre bottnar. Det är ingenting som tyder på att det inte kommer att fortsätta så. Det man vill se, det är att vi vill se att vi kan komma utanför den här negativa trenden, stabilisera sig lite. Och här då någonstans kan det bli intressant då för en ny trend uppåt. Annars så skulle vi kolla neråt. Starkare stödnivå som jag tycker ser väldigt intressant ut, det är den här nere runt 230 till, vad ska jag säga, 233 till 238 ungefär. De här tidiga topparna här och den här lowen från januari, där vi kommer finna en väldigt intressant stödzon. Så det är väl där jag hade kunnat tänka mig att köpa i den negativa trenden om något. Så det är väl den zonen som jag skulle säga att man kan hålla lite ett extra öga på. Så zonen här, absolut värd att hålla ett lite extra öga på i Volvo om vi kommer ner dit för lite köplägen. Men kollar vi här uppe nu, då ser det ut som det är dags att testa toppen här igen. Så vi får se om det kan bli ett utbrott eller inte. Vi ska säga hype. Hype. Mindre svenskt bolag, ser inte ut som det är jättemycket volym i handeln. Jag börjar komma ner 200 dags moving average här vid 77. Det är där vi kommer finna lite intressant stöd som man kan hålla lite utkik på. Även här nere vid 70. Väldigt, väldigt stark trend, har gått väldigt fint. Varje gång vi kommer ner till runt 200 dags moving average så har vi verkar vi ha ett ganska bra stöd. Så man kan absolut hålla koll på lite stöd här nere runt 200 dagars moving average. Om man är intresserad så man skulle ändå säga att man ska hålla lite koll på stöd där. Vi ska se här, jag vill inte missa Powells start idag. För det här kommer bli bland de mest intressanta faktiskt. Det brukar bli lite kanske sleep-fiesta ibland med Powell. Men det här kommer bli väldigt intressant idag faktiskt. För idag fick vi en chock. Idag fick vi en chock som vi inte är vana vid att få. Så det ska bli intressant där. Men syns, det verkar inte som Powell har dragit igång än så länge. Jag ska dra igång den på andra skärmen. Vi ska se så att vi inte missar den. Sådär ja. Syns. Vi poppade ovanför de här topparna. Vi pratade om motståndet där. Dippat ner nu. Finns mycket fint stöd här nere. Jag tycker det ser ut som att Sinch vill fortsätta uppåt. Gör det väldigt starkt. Fick in fina positiva nyheter här den 6:e. Droppar ner lite nu, men Sinch, det ser starkt ut. Det ser ut som vi vill fortsätta uppåt. Det är inte omöjligt att vi kan dippa ner lite till, men trenden är väldigt fint. Det ser ut som Sinch vill fortsätta i den här trenden just nu, så men det ser bra ut i Sinch. Och nu ser jag att Mr. Powell är på G in, så nu kommer jag muta mig. Och så ska vi se vad Powell har att säga.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in.
Thank you.
Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the, sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Go to Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. What you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard.
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of opinion, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
Yeah, we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina. Hi, Chair Powell. Gina Smilik of the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions there. So I would say we don't think we're behind. We do not think we think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, "Oh, this is the new pace." You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level. And we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby.
Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment, and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate, and anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's we're adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be their wage increases, rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person, as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, that could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change, particularly over the last few months. And so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. On the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Neil. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question. You mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. Again, we only know it by its works.
And one more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene. Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level. Over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels. But they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this. But, the direction of travel is clear, And as long as market rents remain, relatively low inflation, over time that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, business people who are actually out there doing business. So I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not. That doesn't really answer the question that we ask ourselves, which is let's look. At this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout. And all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? It's clear that we literally everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Elizabeth. Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households? Well,
what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy, of course. And, of course, people are experiencing high prices as opposed to high inflation. And we understand that's painful.
Greg.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday? After the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
Matt Egan.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does
whatever the right thing is, and nothing else factors in. But in general, can you talk about whether or not you believe a sitting U.S. president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world, countries that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope and strongly believe that it will, continue.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday, other banking regulators.
You know what? Hold the second question.
Okay, sure.
We'll give you the second question. So, the answer to your question is that yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
And is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a calendar date for that. And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment, and then it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
Right. And then yesterday there were merger reform finalizations from the other bank regulators. Well, what does the Fed have to do to align itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage. So very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. That the stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today was, I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Is the economy more vulnerable to a shock now that could tip it into recession?
I don't think so. I don't. As I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that. No, thank you.
Thank you.
Okej. Ganska positiv Powell ändå. Han tyckte ju att de gjorde rätt. Han tyckte ju inte att de var efter kulan, utan att all inflation var på väg neråt. Allting ser bra ut för att börja sänka räntan hårdare. Så, men ganska positiv Powell generellt. Vi såg ju att marknaderna har ju gått som en juju. Vi har studsat upp, ner. Vi började upp. Och vi började upp 1,3%. Sedan har vi fallit ner därifrån nu 1,5 nere, 1,3 från toppen. Alltså jag tror vi får låta där sjunka in lite, se lite vilken approach. Man kan säga det både positivt och negativt. Som sagt, jag kan göra caset att det här ser ut som att Fed är lite efter kulan och nu vill man sänka för att komma ikapp. Men man kan även säga det på att Fed har gjort allting rätt, så nu är inflationen på väg neråt, så det är dags att sänka. Så vi får säga lite enkelt vilken approach, vilken syn marknaden vill ta imorgon helt enkelt. Men Powell, väldigt positiv, tycker att de gör ett bra jobb i alla fall, och att inflationen är på väg neråt och känner sig väldigt självsäker i alla fall. Och det är väl det som jag tycker man kan ta ifrån hans tal. Nu får vi se, det kommer nog bli en vild sista 40 minuter här på marknaden, så vi får se lite hur den fortsätter. Men jag tänkte avrunda nu. Tack för alla ni som tunade in idag. Jag hoppas ni uppskattat videon. Droppa gärna like på den. Och är du inte prenumerant på kanalen, prenumerera gärna. Men annars så, ni får en fortsatt fin onsdagkväll. Så hörs vi. Det här var Robin Omega och jag säger ciao.